Hello, and welcome back to AI Ramblings, episode 44. Yet another very big week and busy week in AI, and we're ending out February, only 28 days. So this is it. But a lot of stuff going on. I want to talk about 5 items in particular, not mostly connected, but in many ways, there are relationships that I think are important to think through. The 4 general topics I want to touch on, and then the main topic. The main topic, just to kind of get to the chase, is Nvidia's terrific quarter, the fourth quarter of fiscal 26. Very meaningful for the industry. I did a YouTube podcast presentation on stock twits ahead of the earnings, and I called Nvidia the God stock, and it is in many ways because it generally it's not only a supplier of the infrastructure to the industry at large around the world, but it is a bellwether in terms of understanding where AI is up and down and sideways. So a lot to talk about there, and I'll come back to it as the main topic today. But the other things I just wanted to touch on in no particular order. Number one, OpenAI, the leading company other than Nvidia that is making a lot of the stuff happen, is continuing to race on a bunch of fronts. They had a lot of news to report. They just completed their $110 billion financing at a post-money valuation of $840 billion. So this would theoretically be the last stop before they do an IPO, along with Anthropic and potentially SpaceX from Elon later this year. And it's a breathtaking size offering with a lot of investors, both strategic and financial. The strategic ones of note are Nvidia investing $30 billion, Amazon investing $30 billion with a bunch of conditions. And basically the company is raising extraordinary amounts of money at a time of unprofitability, at least for the next 4 years, as it builds the compute infrastructure to actually deliver the fruits of their AI research labor to, billion users and presumably a lot more as they race on here. But in addition, they're also racing with Anthropic, which is their number 2 competitor, is specifically in the area of coding software. So they have their Codex software, which is by all accounts, a very good product. But the company that has the pole position right now, the ChatGPT, as it were, on the coding side, is Anthropic's Claude Code and their derivative product, Anthropic Claude Cowork. A lot of buzzwords. But the Cowork product is really meant for the regular people, us, who can use this. Think of it as the office software, the productivity software in AI for most regular people. It's built on top of Claude Code, which is right now, by all accounts, the tractioned coding software for millions of developers. They swear by it. Entire companies, engineers, fleets of them are switching and using this versus, let's say, Cursor, which is doing well, and Codex from OpenAI. But this is the flavor of the month, flavor of the year, as it were. And this is a product that didn't exist a year ago, is now multi-billion dollars of Anthropic's expected revenues of this year, north of 20 billion or more. And it's a very, very big deal. OpenAI has to race with Anthropic with their Codex against the momentum Claude Code has. So that's another very big race. The third race OpenAI is on is building their AI data center infrastructure with their Stargate partnership with SoftBank and Oracle and a bunch of others. And that is, by some accounts, a little bit behind schedule. Each gigawatt data center takes 2 or 3 years to stand up. There are huge supply shortages right now in memory chips for these things, and most importantly, power. And all of this stuff takes time. And this is something that all of these companies have to build at a very large scale at a very fast pace. And the pace is one of the items of issue. Long does Wall Street continue to have patience at the billions that are being invested? The big tech companies alone this year, as I've mentioned before, investing over $700 billion this year alone. And the so-called circular deals financing each other's projects and income statements continue. We saw this week alone, Meta announced a $100 billion multi-year deal with AMD, which is Nvidia's second competitor, and also announced a big multi-billion dollar deal for Google and its TPUs. And I'm going to come back to that later in this session. So these 3 areas, and there are a bunch of others, OpenAI, these are the big races that it's on with its peers and competitors. And so it's something to watch. And I wanted to underline that, discuss it a little bit. Again, I've got detailed write-ups on most of these topics. It'll be in the show notes. You can take a look at it. Lots to catch up on this weekend if you'd like, with a lot of forward links to understand this stuff deeper. But I wanted to talk about it briefly here. Third thing is the Anthropic, despite their success and their leverage with their product today, they have become the product of choice for coders. That's the good news. Bad news is in certain areas like with the government, with the Trump administration and Department of Defense, there's a kerfuffle. Anthropic has built its brand around safety and very stringent rules on how they would permit their software being used, developed itself by them. And there is a little bit of a kerfuffle going on with the Department of Defense, Pentagon, in terms of the restrictions that Anthropic would want in terms of not having their software used for things like mass surveillance or automated AI weapon systems. There is pushback from the government that, hey, we want the flexibility for the defense of the nation, etc. And so they have been, for now, banned by the Pentagon, and there is probably going to be some sort of a negotiation. The reality here is Anthropic's product is critical. It is, for now, better than anything else out there, including OpenAI. And as a result, the government, if they choose not to use Anthropic's product, they're shooting themselves in the foot in the near term, because they will be behind relative to any other so-called as adversary, China, etc. Other countries are going to race ahead on their stuff. If they don't have the access to the best technology and then they penalize Anthropic, this is distraction, which is one of the reasons OpenAI jumped in, Sam Altman, and said, hey, we've come to some sort of an accommodation with the government on this, and we would encourage all the companies to basically follow this template. So a lot of stuff going on the regulatory government front, big issues that these are typical things that we've not had to deal with in other technology waves. It shows you the import of these technologies today, even at its very early stages, and how big the stakes are for sovereign governments, and not just in terms of who gets to use what AI for what purpose, but also building their own infrastructure using all these Lego pieces of technology. Just as a side note, when Nvidia reported their earnings, they talked about their sovereign AI business, where they sell AI technologies to governments around the world. About a year ago, it was about $10 billion. This quarter, it crossed $30 billion. So a triple. And it just again highlights the role of governments in AI at this juncture, and a lot of the very weighty issues that have to be figured out, and how politics plays a big role in some of this. The next item I want to talk about is memory prices. I've talked a lot about that this year, that almost any gadget, phone, computer, laptop you want to buy it today, not tomorrow or a year later. Why? Because the prices are going up. Samsung announced their latest S26 phones. They acknowledge that the pricing for the base models are up $100, partly for tariff reasons, partly for supply shortages of memory and so on. And the HP, which is the number 2 vendor of PCs and laptops, said that the cost of memory chips in their computers has gone from 18% last year, and it was, by the way, 9% about a year prior. This year, it's about 35%. It's more expensive than anything else in your computer, the screens, the other input-output things, the processors, the GPUs, etc. Single most expensive item. So the point is, almost any, for years, if you wanted to buy a relatively inexpensive computer, you bought a Windows machine. Today, ironically, the cheaper, the better value is Apple. Apple has typically been the more expensive, relatively speaking, computer or phone. It's now the relatively cheaper. And there's a reason for this. Tim Cook, who's the CEO of Apple over a decade now, he is the master of supply chains. And he has used Apple's immense balance sheet to essentially build huge ecosystem from suppliers all the way in Asia, China, etc., to here, that builds in for him at Apple a heck of amount of resiliency and flexibility in terms of controlling the shifts of supply and prices on the core components. So Apple, relatively speaking, is in a better position on memory than most of its competitors. They have a vertical stack with their own silicon and their suppliers that is unmatched by any PC vendor, whether it's Dell, Lenovo, HP, as I talked about, around the world. And so we have a scenario for the next couple of years. Apple, for consumers, is actually the better option, not just in terms of cheaper relative hardware, but better software. And that is another thing that has not been thought through by folks who view Apple as the laggard in AI relative to its peers. And it's all but that. I've written a lot about this, that Apple, I think, is one of the biggest beneficiaries of AI starting this year into the next couple of years. And this memory resiliency is another thing that I would highlight that we don't lose sight of. The last item I want to talk before I go to the Nvidia quarter is Elon Musk. As I've talked about, I've had extensive posts on this. The biggest IPO, if it happens this year in this June, around Elon's birthday in that month, is the IPO for SpaceX. Remember, he just merged his AI company, XAI, which he's been valuing at $250 billion with SpaceX to give a $1.25 trillion valuation. And if it goes public, it would be one of the biggest IPOs ever. And unless, of course, he merges it with Tesla, which is another possibility I've talked and written about. But one of the other parts of SpaceX, besides their partly reusable rockets, is their business called Starlink, which provides internet access via thousands of satellites around the world. Elon's company right now, Starlink, basically has over 2/3 of the satellites over our heads. And they're launching hundreds, if not thousands more in the next couple of years. They just launched 25 more in one of their Falcon launches this week. So Starlink is a major crown jewel of the SpaceX business. For investors, an attractive one because it has a subscription model, provides internet connectivity to half or more of the world's people who don't live in cities. So you get rural access. They're also becoming the internet provider of choice in airlines. So if we've all been on commercial flights and we have barely working, functioning dial-up connectivity, is because we've used technologies that were 30 years old. With the Starlink type of satellite technologies, we now get broadband type of technologies on planes, and that is a big piece of Starlink's thing. Having said all that, Starlink has a lot of challenges as well as a public part of SpaceX. And I go into this post about some of those details, and there's a lot of competition coming. Amazon is coming up with their LEO network. Or sovereign countries are basically saying, hey, we need to build our own Starlink networks because this is a national security type of thing. So China, Europe, they're all building their own networks. So you've got a picture that is very different than what it looks on the surface in terms of the Starlink's possibility. And the last thing I mentioned in the note, the big gorilla here, Apple again. Apple is very interested in having very reliable satellite network in the next couple of years. They actually bought a 5% piece of Globalstar, which is a competing network. And I talk about this because today on Apple phones, you have this SOS feature where if you're hiking somewhere and there's no cell phone connectivity, you'll be able to send texts in an emergency basis that'll use the satellites to bounce back and come back. But in the next 2 or 3 years, there is a scenario where we will see broadband access directly to satellite, bypassing in many cases the phone companies like a T-Mobile or Verizon. We're currently reselling some of these services, but that dynamic is going to impact the businesses as we get a critical mass of satellites that can handle internet connectivity directly to phones at scale, meaning hundreds of millions, if not billions of people. So Starlink has certain realities that it's important for people watching technology, et cetera, to understand. And I go into detail. And because SpaceX is in the news because of their prospective IPO, it's something to keep in mind and understand a little bit better. Most of the discussion on SpaceX doesn't talk about Starlink. They talk about what Elon wants them to focus on, which is AI data centers in space, which I think is a relative pipe dream. Will take decades before they're real. And in fact, Jensen Huang, CEO of Nvidia, this week was asked about data centers in space, and he gave the most diplomatic answer. Little reasons, and I've got it clipped in one of my notes. I would encourage you to read it. And he just systematically, factually tells you why it's going to take a lot more time than even the Elon Musk is suggesting. But he doesn't do it negatively because Elon, of course, is one of his biggest customers for his chips for XAI and Grok, Elon's LLM service. But he does it in a factual way that kind of lays it out. Anyway, so I just wanted to touch on all of that, which brings us back to the main topic I did want to spend a teeny bit of time on. This call is the business of NVIDIA's quarter. NVIDIA's quarter, again, this has been one of over 20 quarters that's just been, this execution was pretty close to perfect on financial metrics, on operational metrics. the growth in their revenue, hitting earnings expectations, hitting gross margin expectations in the mid 70s, and most importantly, the guidance do they provide to analysts for the next a few quarters looking forward. And again, that was at the upper end of expectations. So the stock actually on Wednesday, when they reported earnings, was actually up a teeny bit, but since then has been down for the last couple of days. Mostly, it's kind of sell on the news. People who were expecting a good quarter, they got it, and there was profit taking is more likely than not what's going on. But it was a 5% correction, which on a $5 trillion company is meaningful numbers. So people pay attention to it. The media writes about it, etc. But the other broader concerns about AI this year continue to be, and the question I get a lot when I talk to investors is, hey, everyone knows that the big tech companies are spending 700 billion this year, but that's already in the stock because Nvidia benefits from that directly because they're the ones selling the pickaxes and shovels to all of these people with their chips. Isn't the stock capped from here? And my answer, and I actually did a YouTube video on StockTwits, which I've linked in the show notes, where I literally say it actually isn't, because all of the world's tech companies need to continue to build these data centers at a scale that most regular people can barely get their heads wrapped around because the numbers are so immense. The reason you need it is because AI, the technologies that we have, as imperfect as they are, as hallucinatory they are still doing extraordinary amount of productivity enhancement of people, whether it's in specific verticals or like legal and healthcare. These are things that caused all the kerfuffles over this notion of software apocalypse and job losses. And yes, every week there are software companies that are laying off people. Block, which is Jack Dorsey's payment company, and Bitcoin company, was down. They announced that they were going to be laying off 4,000 out of their 10,000 people. Stock, of course, is up 10%. And my point on this job loss business, and I've written a lot about this, is that there has been almost no technology in tech ways of the 200 years of history where, yes, it does cause job losses in specific niches for a short time, but the broader economy adjusts, and most people adjust to the opportunities that the technologies create that expand the markets far bigger. And so that then provides huge opportunities for people to be employed again. And I don't see that picture being different, even with AI. I don't think is AI as amazing as it is in today's versions, whether it's the chatbots or the coding stuff that's coming, the agents and the reasoning stuff. They are far from being capable of replacing humans, despite the hype and the hyperbole of the founders and CEOs of some of these companies. I think they're a little bit ahead of their skis on that. But this is a debate, and that's one of the reasons why the markets are going to say, hey, Nvidia, even though it's an amazing story, 33-year company that's an overnight success at this scale, will that continue? Right now, the tailwind is behind them. Their technologies are the cat's meow. This remains what I called the God stock. This is not a stock recommendation, but it is a reality that their technologies, at the rate at which they're improving it, I mean, they're literally selling their Blackwell chips this year. There'll be the Blackwell Ultra chips shortly. Then there's the Rubin series of chips, which will continue for another 2 years, and then the Feynman. Each one of those on the various parts of AI computation, things like everything from training to inference over here and everything in the middle, are multiple times better and more efficient from a power point of view, literally every 6 months. And that is a pace of change that surpasses even Moore's law over the last 50, 60 years. That's given us the computer revolution, the smartphone revolution, the cloud revolution. So that's why I keep saying all the tech ways before, my experience in these industries was a dress rehearsal for what's about to happen. But it's not all in a straight line. It's all in very choppy, jagged lines. And that's what we all have to get our head around. It has big personal implications to all of us in terms of needing to adopt these things at a pace faster than we all have to get accustomed to. We are not accustomed to this rate of change, even though we've seen huge changes in 20 years. I remember when we used to watch appointment TV, and now, you've got millions of channels online through streaming that you can watch anything at any time. That's happened only in 15, 20 years, but we got adjusted to it. This stuff is going to change things that much more faster. Things like healthcare, things like financial services, things like every vertical industry you want to think about. And Nvidia is at the forefront. Nvidia, by the way, I'll just mention, I'm very excited about Nvidia's auto driving platform, where they're providing the hardware and software. It's not something that's talked about a lot, but everyone talks about, hey, Tesla and their robo taxis and Google and its Waymo and Uber, which is I think a bigger beneficiary of self-driving taxis. But if you really want to understand companies that are playing a key role, it's Nvidia. Their platform is actually being adopted by car makers around the world, including Chinese automakers, and they have as much, if not a greater shot at being the Wintel of auto self-driving fleets around the world of tens of millions of vehicles, more than any one of the other companies that the markets are currently focused on. And that's not something that everyone even thinks about when they talk about NVIDIA. So these are the droppings on the floor as opposed to the things that people are really focused on for NVIDIA. Again, not a stock recommendation, but these are things that are just beginning, and I wanted to highlight the secular tech trends. So that takes us to the last couple of topics of the show for this week. And I want to focus on my read of the week. Again, it's really a couple of top articles that were written on Google's other advantage in the AI space other than Gemini, which they've been racing ahead of ChatGPT, and it was a catalyst to ChatGPT having its internal code read. But Google has another secret weapon, which are excuse me, their own chips. They're called TPUs, tensor processing units. And these are the own chips that they've built to compete with NVIDIA. Again, the market's big enough for all of them. But Google this year has been making good progress selling their TPUs to companies like OpenAI at scale. And this week, as I said before, they had a big announcement with Meta. And so the TPU infrastructure is a very competitive moat for Google. And there was an article that details this, which I think is my read of the week. That if you're interested, you should look at it. It'll give you a lot of nuance and detail around this stuff, and my write up as well. And then finally, my obsession of the week. As most of you know, a gadget freak. I basically own every type of iPhone Air, and I've got foldables and Androids up to galore. This week, we saw big announcements from Samsung and their Unpacked show with their new latest Samsung S26 phones. But more importantly, this week, there's a big conference in Barcelona, Spain, Mobile World Congress conference, where you're going to see all the world's smartphone companies, especially the Android ones, announce a lot of their phones. There's going to be a lot of weird stuff, exciting stuff, interesting stuff for phone geeks and gadget geeks. Samsung's phones have a new feature with that built-in at the pixel level privacy screen. So if you're in a subway train with people, you won't be able to read, or other people won't be able to read your screen because it'll protect it at the pixel level without you having to put a protector screen. There are a bunch of phones that are expected to be released that will have very advanced Leica type of camera systems and a bunch of other cool features. So if you're a camera geek or a gadget geek, lot to be excited about. Bad news, they'll be more expensive than last year. These phones typically have been less expensive every year because of Moore's law, as I said before, because now of tariffs and memory shortages and so on. Prices are going up, not down for the next couple of years. So we have an aberration, but it's all kind of cool if you're a technology enthusiast like yours truly. So that's my obsession of the week, and I wanted to highlight that. And so that closes out this week's AI Ramblings. I hope you found this of interest. Again, as usual, any thoughts, comments, questions, please shoot me messages on all the socials. And as usual, appreciate likes and subscribes because that helps the algos and helps me in terms of get my content out there. And as usual, thank you again for joining. And we'll see you for episode 45.